All right. Good evening, everybody. You're welcome to our workshop around the International Sustainability Standard Board, ISSB, and of course, IFRS 18, that is looking into presentation and disclosure in financial statements. Before we start, kindly confirm you can hear me. All right, thank you for the confirmation. So once again, you are welcome. I know you are preparing for your exams, SBR on Tuesday, I guess, and financial reporting also on Tuesday. So I'm not going to take your time because I know you are ready. So I will just, probably the next 1 hour or less, we should be through. I'll just quickly highlight some key areas that I think you need to be aware of around IFRS 18, the new IFRS 18, even though it's not effective yet, to be effective from 1st January 2027. Although earlier, I think, I'm not sure whether they allow early application, but of course, it has to be effective 1st January 2027, and we're saying 2025. But again, it is something you might need to be aware of. I'm not sure whether the examiner is going to, go into this area, even though the examiner has the right to test your knowledge around IFRS 18. But again, you have IS1 before now, which deals with presentation of financial statements. So now we have IFRS 18 that's going to replace IS1, right? So, so the issue now is, what is IFRS 18 bringing on board? I think it's more of it's changing the dynamics around how you present your financial information and more disclosures in the financial statement. All right. So there are some elements of IS1 that didn't really change, specifically around how you classify your current assets, your non-current assets, your current liabilities and non-current liabilities. You still have all of that, under IFRS 18. So again, I'll just quickly, run through those key changes. So just for you to be aware, then from there we discuss sustainability reporting around the ISSB standards. We're going to look at IFRS S1 and IFRS S2. So again, I will just also highlight what I think the examiner might, bring in your exam. So for financial reporting, it's limiting it to IFRS S1. And for strategic business reporting, you want you to have an idea of what you have in IFRS S2 and IFRS S3. And I can bet it, you can't really escape it in your exams. And interestingly, there is no calculation in there. It's just for you to understand what the standard is really talking about. And I will also try to highlight what I think the examiner might test in that regard. Then we will end the class. So I just hope I'll be able to stick to the time. I think I scheduled it for about 2.5 hours. But again, because you are preparing for your exam, so I don't want to take your time. So probably in 15 minutes or 60 minutes, let's see whether we can cover all of this. So let's start with IFRS 18, presentation and disclosure in financial statements. So again, as I mentioned earlier, it will be effective from 1st January 2027. So what is really IFRS 18 is all about, right? So you don't need to panic. Just the way, if you know IS1, then under IS1 you have the component of financial statements. Then here is now going further to say what are the primary components of financial statements. We are going to see that shortly. Now, the objective of the standard is to set out requirements for the presentation and disclosure of information in the general purpose financial statement. So if you have read the ISB conceptual framework, the updated version of 2018, you know that the chapter 1 talks about the objective of general purpose financial statement, right? So which is to provide information about the financial performance, financial position, and cash flow of an entity that is useful to the users of financial statements to make economic decision. So that's what you have under chapter 1 of the ISSB conceptual framework. So the same way here, the objective is to say what are your requirements in the presentation and disclosure of information in the general purpose financial statement. So general purpose because there are various users of financial statements, and you can broadly categorize them into internal users and external users. So that will help you to understand their needs, right? And of course, their needs is quite wide, but at the minimum, once you can produce or present the financial performance, which speaks to your income statement, financial position, which speaks to your statement of financial position, commonly known as balance sheet, and the cash flow of an entity, then you should be able to meet their needs. So the scope of IFRS 18, it applies to all financial statements that are prepared under IFRS. And you know IFRS is the International Financial Reporting Standards, right? So here, what do you need to, what are the general requirements and what are you expected to disclose? Now, as you can see on your screen, if you can see that you have the complete set of financial statements. So you have the statement of financial performance, you know, before now we call it the statement of what's it called, income statement, or we call it statement of profit or loss account and other comprehensive income. So now it's going to be named the statement of performance. So it can be, so IFRS 18 says it can be presented as a single statement or you add it together, okay? So just like when you say income statement, it has profit or loss and your other comprehensive income, right? So it's going to be called under IFRS 18, statement of financial performance. So you still have the statement of financial position, then you still have the statement of changes in FAT, then statement of cash flows is there, note to the account, like you know. Then here you also need to show comparative information and some one other information there is the statement of financial position as at the beginning of the preceding period. So all of this is to enhance accountability and transparency, so to speak. So if you're writing SBR, for example, the examiner will not ask you all these direct questions. So most likely, he's going to ask you probably to justify the reason for IFRS 18 and what are the likely improvements to financial statements, right? So one of your arguments will be to enhance visibility, transparency, accountability, and of course to help users of account to understand the flow of financial information in order to make informed decisions. So that's what you need to think about, right? Then for financial reporting, I'm not sure whether he wants to test you on IFRS 18 yet, but for SBR, obviously, he may likely do that. Now, I'll find a way to, I think some of you have this material already, I guess. But if you don't have it, you can just reach out to me. I'll send it to you, right? Now, so in addition, you when you are preparing your account, part of the requirement is now to state the name of the reporting entity and if there has been any change in name. So you have to disclose that. Then whether the financial statement of a group of entities or an individual entity, that's to be expressly stated. You know, again, some of these, you still have it under IS1 actually. Then information about reporting entity. Then you're also going to disclose the presentation currency as defined by IS 21. So if you're writing FR, your lecturer must have taught you IS 21 because it's in your syllabus. So this is the first time ICANN is including IS 21 in FR syllabus. But obviously in SBR, this is something you should learn, right? So whether it's going to be tested or not, that's another thing entirely. But then you should be able to differentiate between functional currency and presentation currencies, right? Okay, so then you also have to disclose the level of rounding up used, level of rounding used. That is it in thousands or in million, which you also see in normal financial statements. So I don't want to bore you with most of those stories. I'm just trying to highlight some key information you need to know. Now, IFRS 18 also talks about aggregation and disaggregation. Ideally, when you talk about aggregation, it's like you're aggregating similar items together and presenting as a line item. So now, IFRS 18 is now saying that an entity is required to aggregate or disaggregate information in the primary financial statement. So remember all those financial statements that we highlighted earlier, they are the primary financial statement. So this primary financial statement is also being used in IFRS S1 and IFRS S2, right? So because they are of the opinion that you are the primary users of the account, which is usually the shareholders, they are the direct users. So when you look at your banker, your lenders, they are not primary users. Probably they are secondary users, okay? So I just wanted to quickly highlight that, right? So here, he is saying that, or the standard is saying, an entity is required to either aggregate, or disaggregate. If you're disaggregating, you are presenting them separately, right? Information in primary financial statements and the notes, okay? Now, items that should be aggregated must be based on shared characteristics. That means they must be similar, if you understand that. If you've done IFRS 8 operating segment, you should be familiar with that, right? Before you can aggregate together, those operating segments must have similar economic characteristics and must be similar in about 5 scenarios, right? The nature, the production or process and all of that, or production process and all of that, right? So I'm not taking IFRS 8, right? So now you can only aggregate if they shared same characteristics and disaggregate based on if their characteristics are not shared, all right? So that's what that is saying. So if, for example, maybe in FR, you can ask you, explain the concept or the term aggregation and disaggregation. So that's what you need to tell him. Aggregate means you are putting them together so that you can present them as a line item, then you disaggregate if they are not shared, all right? So you have to look at the characteristics. So that's it. Now, secondly, you also need to understand what we mean by offsetting, right? Ideally, in financials, you don't offset. What's the meaning of offsetting? So you are let's say you are the company, I'm your customer, right? In a transaction, I'm owing you 10 million naira. In another transaction, you are owing me 8 million naira. So when you are preparing your account, you can decide to net off so that you just show the balance. So that is not allowed normally, even under IS1. So the same way under IFRS 18. So you have to show what is your revenue or what are your revenue, your expenses. So you don't net off your payables against your receivables. You have to show them as a line item. However, the standard says assets and liabilities, income and expenses cannot be offset unless it is permitted by a specific IFRS. For example, if you go to IFRS 9, there are conditions where you can offset your financial instruments. That's your financial assets and financial liabilities. Those two conditions stated under IFRS 9 must be met before you can actually offset. But under IFRS 18, you cannot offset, even under IS1, except it is permitted by a specific IFRS. So if a specific IFRS permits you to offset, then it will override the requirement of IFRS 18. Okay, so just take note of that. Now, IFRS 18 now went further to give us specific requirements to the individual financial statement. So what are the specific requirements? For example, in the statement of profit or loss. So remember we said you can call it statement of financial performance, right? So, but when you break it down, you have statement of profit or loss and your statement of other comprehensive income, right? Or broadly, you call it income statement. Now, he's now saying, just like you have your cash flows, if you've done cash flows at 7, you know you have something around operating activity, financing activity, and investing activity. So you're going to have similar thing under IFRS 18. So that means from 2027, when companies prepare their financial statement, it will no longer be the normal published account that you know. If you are writing FR, I'm sure you know what I mean by that. When you have your revenue, your cost of sales, your gross profit, probably your other income, your expenses, operating profits, and all of that, right? So here, financial statement, or let's say the income statement, will now be in category. So the first category is the operating category, where an entity is required to classify all income and expenses not classified in other categories. You're also going to have investing category, financing category, income tax category, and of course, discontinued operations category. By writing FR, note this, right? In case it decides to ask you the specific requirement in the individual primary financial statement. So again, for SBR, you also need to know this because in the line of your argument or your discussion, you might be required to talk about this or just to mention them, you know, because when you talk about transparency, visibility, more disclosures, you know, you may want to talk about, for example, IFRS 18 now requires that in preparing statement of profit or loss account, those information must be presented in the following categories. Then you mentioned the operating, the investing, the financing. I think if you have learned cash flow, then you're already familiar with operating category, investing, financing. So the two you're adding is the income tax and of course discontinued operations category. But obviously, you may not really have discontinued operation at all times, right? But you always have the first four, all right? So that's what you have there. Then it also further breaks it down into, you know, if you have investment in associate, cash and cash equivalent, other assets, and then all of that. Okay. So again, I'm just trying to highlight, but I know I'm speaking too much, right? All right. All right. So here, you now further break it down into presentation of line items in the statement of profit or loss. So what do you require under revenue? So normally, revenue is revenue presenting separate interest revenue calculated using the effective interest rate method. And insurance revenue. There are some revenues that are peculiar, like the insurance company. So that's why I'm saying that your operating expenses. So it just try to, you know, further break it down into what you're supposed to do. Then also talked about the how you present your income statement, your statement of financial position, which is not or which are not largely different from what we have under IS1, right? So you see how your current asset, they are expected to be realized in the normal operating cycle, usually within 12 months. So it's still the same under IS1, all right? Then in the face of financial position, you still have your PP, your investment properties, your intangible asset, your goodwill, your financial, you know, so all these ones, I think they are straightforward. I think the main issue is around the profit or loss account that is going to change drastically, right? Then it also talked about what's it called, other disclosures around you need to either present in the statement of financial position or the statement of changes in equity, or to disclose the note details for each class of shares, including the number of shares authorized and issued, as well as description of each reserve within the within the equity. Okay, so these are just brief information around IFRS 18. Now, beyond this, there are some other technicalities around management defined performance. So I don't want to bother you with that yet. I don't think the examiner will want to go into that detail. So that's why I didn't include it here. Okay. How do you define? Then you also have the APM, alternative performance measurement, right? How do you define, how is management defining our own performance? How do you measure that? So all of those details is still captured under IFRS 18. All right, so I believe you have gotten something. All right, so again, for FR, just look at the specifics at your level. But for SBR, you want to think more strategic. All right, how can this enhance transparency, accountability, visibility, and all of that? So that could be the argument in your exams. Okay, so I believe you have learned something. I think I saw something on this note. This note is actually very rich. Financial reporting issues with artificial intelligence. That's a first bit actually. So this is not part of what we wanted to discuss. All right, so that'll be the end of IFRS 18, at least for now. So quickly, we switch to the ISSB standards. All right, so let me try to search for the material before I give some background information on that. Okay, let me try and share my screen. So I'm going to start with the sustainability, sorry, ISSB itself. That's the International Sustainability Standard Board. All right, before I go into the specific standards, that's IFRS S1 and IFRS S2. Sorry. Now, I hope you can see my screen. Can you confirm, please? Okay, great. Thank you. Remember, I didn't want to take your time, so I'm just going straight to the point because, sorry, I know some of you are reading and you're going to go overnight, and you're also preparing for case study, right? Okay, so let's look at ISS, International Sustainability Standards. All right, sustainability reporting, you call it ESG sometimes. I think the foundation is CSR. If you know CSR, that's corporate social responsibility. All right. So there's been a lot of growing demand around the world around sustainable business or sustainable investment. So the idea is that if you cut a tree, plant another one, or the ability of a company to make profit today without preventing future generation from also making profits or creating value. So that's where the concept of sustainability started from. So when you go online, for example, you'll see a lot of sustainability standards or frameworks around IIR, GRIs, so many of them. So all over the world, there are a lot of, which standards should we really follow, or which framework should we really follow when we are reporting on sustainability. So there was a convergence, all right? So they approach, before now we have the IFRS Foundation, okay? IFRS Foundation. So IFRS issues IFRS. That's International Financial Reporting Standard. So they use the IFRS standard, right? So under that, but before then, when you see IFRS Foundation, I wish I can do the organogram, but let me just try to explain. So when you look at the IFRS Foundation, then you have the ISB under that. So ISB is International Accounting Standard Board. So under that, if you draw the line again, then you have IFRS standards, right? So now they approached IFRS Foundation that they wanted them to also be in charge of sustainability standards. Instead of having so many of those frameworks across the world, and a lot of meetings were held. So what they now start doing is all those frameworks started coming together to become one. So now IFRS accepted. So when you now look at the organogram now, I said earlier, IFRS Foundation. So if you draw it down, you have ISB. Then on the other hand, you have ISSB. So ISSB is now under IFRS Foundation. So when you say IFRS Foundation, it's divided into two: IASB, International Accounting Standard Board. So instead of them lumping sustainability there, so they wanted to call it out, then the other arm is the International Sustainability Standard Board. Does that make sense, right? So the IASB now use IFRS standards, right? Then which is also IAS actually. So anytime there's an amendment to existing IAS, it becomes IFRS. Just like we saw in IAS 1, that is now becoming IFRS 18. All the IASs we have now is because there's no amendment on them. That's why they are still called IAS. The moment there's an amendment, they will automatically become IFRS. So probably in the next 20 years, that will no longer be IAS, right? Now, but they are the same in terms of technicality and application. Then on the other hand, you now have ISSB. Now, ISSB is now in charge of sustainability standards. And the two set of standards they issued first is the IFRS S1. So anytime you see S there, it means sustainability. So International Financial Reporting Standard 1, then International Financial Reporting Standard 2, right? So IFRS S1 is dealing with the general requirement for sustainability-related financial information, and IFRS S2 is dealing with climate-related disclosures. So what do you need to know under those two? But before I go there, I need to lay some foundation. And beyond the examiner testing IFRS S1 or IFRS S2, it may also ask you some specific questions around sustainability, right? Now, what do we really mean by sustainability? I think it's about protecting the environment, right? For example, you don't put on your lights when you are not using them. You also watch the way you use water. You don't just, waste water. Then when you are disposing, what's it called, wastages or whatever, then you have to do them in a sustainable way, right? For example, and so what they are doing is to now target companies because it is believed that the activities of companies is impacting the environment, for example, around emissions, greenhouse gas emissions, right? So a lot of, if you go to oil companies, pollution in the air, in the water, you go to pharmaceutical chemicals, virtually all companies are really impacting the environment. Then when you look at this part of the world, you see most of our vehicles, they are still around, what's it called, fuel. You use, is it petrol, right, or diesel? But now there's advocacy around electric vehicles, right, which is more sustainable than, using fossil and all of that. So all of these are around sustainability because of the impact. So when IFRS accepted to take on sustainability, there is still one standard that is still there. That's the European Sustainability Standard, European Sustainability Reporting Standard, ESRS. And I can ask you that question. So there's a difference between the two, actually. That's ISSB. Under ISSB, I think, sorry, I forgot to mention that you have SASB. Okay. ISSB is International Sustainability Standard Board. There you now have Sustainability Accounting Standard Board. So the difference is that ISSB looks at global industry, all industries, right? That's ISSB. Then SASB looks at specific industry, but there is no much difference between the two of them. They still work hand in hand. Then beyond those two, you now have the European Sustainability Reporting Standard. So here, they are looking at impact material in terms of materiality assessment. They are looking at both impact materiality and financial materiality. But ISSB is looking at financial materiality because they believe that anything that has whatever impact is going to ultimately have financial impact or financial materiality. Okay, so that's just different. So, so the examiner can ask you the difference between the two. I think I prepared a question in the mock, yeah, so you can quickly read that. So you don't need to, you may not likely read all of this document, so just use those questions to practice. But again, I want to show you some things that I think it may likely ask you. So whether you're writing FR or SBR, so listen, but by the time I get to where it is split in FR and SBR, I'll let you know so that FR candidate can know where to focus on and SBR can also know where to focus on. All right. So now, as I mentioned, so we have the ISSB. And I was also trying to let you understand what sustainability really is, because the examiner can ask you to justify the reason for having sustainability. It's new in this part of the world. When IFRS S1 and S2 was issued, Nigeria was the first country that adopted IFRS openly, right? Even though mandatory compliance is going to be from 2028 financial reporting. That will be from January 2028. But again, the Financial Reporting Council of Nigeria already rolled out a roadmap to adoption of sustainability standards, all right? So he did it in 3 phases, phase 1, phase 2, phase 3. So phase 1 is the early adopters. We are currently in the phase 2, which are the voluntary adopters. I think from 2024 to 2027, and this is 2025, right? So that's voluntary. And phase 3 will now be mandatory for PIs. The PIs are the public interest entities. The moment even if you are not listed on the stock market, the moment your company's revenue is about, I think, 30 billion and above, then you're already in the net of PIs. So you must adopt sustainability reporting. So now, again, when just like when something like risk management, internal control came in, accountants are still the one that were suitable to do that. So the same thing with sustainability. It's only accountants that can also champion this in companies. And I can't really wanted you to be aware of this. So if you check the syllabus, it was talking about sustainability on and on. I'm very sure it's going to test it in SBI, we test it in case study. It will probably test it all rounder, most likely. So you can't really escape it. So and there are easy marks you can easily get if you see it in your exam. In fact, if you see it first and you just quickly do it, and about 10 or 15 marks or 20, depending on the kind of question he's asking. So he can ask you in FR, what are the role of accountant in implementing sustainability? So you have all of that in the notes, even if you were not able to read it, based on this my explanation, you're able to, think of the benefits, the challenges of implementing sustainability. One of the challenges is we don't have skills, knowledge gap is there, right? Data gathering, because when you look at sustainability for manufacturing, for example, you have the technical aspect, which is operational. How do you measure your metrics and targets, your emissions, your water use, all the material topics, they are there. Then you also have the reporting side, financial reporting. So how do you link your reporting into all of that? So this is really, in fact, for me, it's another career entirely that you may also think about if you want to know more about sustainability. I think there is an association already. I'm trying to research on that so that I can also join. So it's a career for the future. And you can be a consultant in that regard. But let's come back to the exam. So I think I've spoken a lot, right? So I've been able to explain the foundation to you, right? How all of this, came to be. So, and I've told you how the sustainability issue is also under IFRS, okay? And I also said that somebody said the presentation slides. Yes, I know it's on the first page. I actually have everything in my head, right? So just listen to me. So if I needed to show you something on the slide, I'll definitely get there. Okay. So just listen. So I can actually take everything without looking at the notes, but because of you, so I'll go to the note for it. So on the content, I have so many content here, but I will quickly show you. I've talked about the framework. I will show you the local standards, Nigerian standards that support sustainability. I know there is no lecturer that might have taught you that, right? And I can ask you. Because when you talk about everybody's just talking about IFRS S1, IFRS S2, we still have some local standards in Nigeria, or local laws rather, that support ESG initiatives, right? Like the Climate Act, like even you have CBN, you have the SEC, I will show you all of that so that in your preparation, you can understand that, okay? Then I also mentioned the IFRS Sustainability Roadmap. I will quickly show you that as well. And the readiness test, the 17 documents or information that FRC is requiring what's it called, the PIs to submit, when they want to start the implementation or the adoption of the ISSB standards, all right? Then what could be the impact of sustainability reporting on corporate performance measures? So that's what you have here. There are another document I have for the specific standard, IFRS S1 and IFRS S2. What's the difference between the two? We're going to know all of this in the next 20 minutes, maybe max. Let me see the time. I said I don't want to use more than 1 hour. Okay. All right. So you're going to know all of this shortly. Then I can release you to go back to your preparation. Right. So the first thing here is I've talked about the emergence of ISSB, so I don't need to waste time on this. The need for ISSB I think I also tried to explain all of that. It's now okay. So those what's called sustainability reporting is now a global baseline. So let me even tell you upfront that you see that IFRS S1 and S2, they are more those standards are more of investor standards. Yeah, let me put it that way. It's more of the investor. So the investors, they want to know what are your climate related risk and opportunities so that they can know whether to give you resources, whether to support you, whether they even want to be sure that their investments are protected. All right. So they want those disclosures. And again, it is a that's why it's called is it want to address the need of a global baseline. That's what that means. Then also to support investors and stakeholders. Okay, so when you have these notes, I show my financial reporting student they have it, and I've sent it to my SBR students as well. So, but if you're outside all of those scope, I can also send it to you. So, just for you to have an idea of some basic questions the examiner can ask you. All right. Okay, so I will discuss all of this when I get to the IFRS standards. So you have some reporting framework as well. So you can just take a look at that. So the key features of sustainability reporting is looking at holistic view because it's going to consider economic, social, and environmental. That's why they normally call it ESG, if you remember. You know, I mentioned ESG when I started off earlier. Okay. Then two is integration because you now have to integrate your performance, your operation with financial reporting. Those are the key features of sustainability reporting. And of course, transparency is also there. Okay. Transparency is also there. Sorry, trying to put on the slides. Oh. Okay. Then the other one is strategic importance and all of that. So these are just the key features. Then, as I mentioned earlier, we have some examples of reporting framework. So we have the GRI, like I mentioned, the Global Reporting Initiative, then the SASB, and I said that Sustainability Accounting Standard Board. We also have the TCDP, that's Transparency and Disclosure Protocol. So just for you to know all of that in case you decide to ask you, right? Let me see what I need to also mention. Yeah, key problems. Yes, please take note of this. Key problems and limitation of sustainability reporting. I said it earlier, skill gap is there, data collection is a problem, inadequate internal expertise, that's skill gap is there, right? So please, in your study that, balancing transparency with confidentiality. So that's also a major problem because if you are saying I should start disclosing my climate related risk and opportunities, opportunity is more of your strategy, right? So how do I balance? I want to be transparent and with confidentiality, although there is a portion under IFRS 2 that says that if those climate related opportunities are commercially sensitive, the entity is permitted not to disclose them. So the question now is, how do you how do you judge that that information is commercially sensitive? Right. Okay. Another one is a lack of standardization in reporting. You know, I said it earlier, there are so many reporting framework before they start streamlining into the GRI, into the SASB, and the TCDC or something that we saw earlier, right? Okay. So those are the challenges. So please learn that as well. In fact, you have up to, let me see, 8 challenges, right? You have them here. All right. So please take note. So you have the SSB accounting standard board, like I mentioned. Under that, you have IFRS S1. So I'm coming back to IFRS S1 and S2. Oh, I even prepared everything in one document. Okay, but I'm coming back there. Let me now show you the what's it called? The local laws and regulations that support ESG in Nigeria, right? So you have the Environmental Impact Assessment Act of 2004. Can you imagine? Since 2004, So they are related. Some of them are actually related to it because it's related to environment. So it's assumed that they are also supporting ESG. Then you have the National Environmental Standards and Regulation Enforcement Agency. This is very popular, NISRA, right? 2007. Then you also have the Companies and Allied Matters Act. You have the Petroleum Industry Act of 2021. You have the Sustainability Disclosure of Nigerian Stock Exchange Guideline 2019. Even the Nigerian Code of Governance 2018, the Nigerian Climate Act, that's what I said earlier, in 2021. You have the CBN Sustainability Banking Practice. In fact, sustainability started earlier in the banking. So banking sector, they want to finance sustainable investment. So when they want to finance projects, they want to see, are they sustainable investment, right? Are they aligning with sustainability efforts? So you already have it in the banking space or financial institution, as it were, right? Then you have the SEC. I think we mentioned that earlier, but here there is also a specific guidelines on sustainable financial principle for the Nigerian capital markets. So why I'm showing you this is in case the examiner asks you, what are the, especially FR, okay, what are the local standards that support or local requirements or local laws or regulation that support ESG? So please, I think you have how many here? Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So you have 9. So please take note of that in case he asks you. Maybe IFRS, maybe he ask you. Okay. All right. So you also have the Nigerian. Okay. So here, I think I just broke it down here. The content of Nigerian Exchange Guidelines on sustainability reporting. So I don't think he may bother you with all the content. If he's going to ask you the content, it will be the content of IFRS S1 and S2, and I'm coming there shortly, right? Okay, so let me now go to the roadmap for sustainability under what's it called? The FRC, as I mentioned. Can you see? So we have phase 1, the early adopters. Can you see that? So please take note of this in case they ask you. All right. So we have phase 1 is between. Okay, it's between 2020, I think it's 2023 to 2024, right? That's early adopters. Then yes, voluntary adopter is between 2024 to 2027. Then mandatory is going to start from 2028. Then SME is 2030. For the what's it called? I think for government agencies, they've not determined their own. Let me show you. Yes, I have it here. Can you see? That's phase 4. So you can see it on the table. So you see phase 1, early adopter. Please note this. So you can ask you, I don't know, right? Phase 1, phase 2, voluntary adopter, 2024. Yeah, I'm correct. 2024, 2027. Then phase 3 is the mandatory. So if your company is PIEs, I told you earlier, even if PIE is not, it did not say listed though. Okay, if you are listed, you're automatically PIEs, right? Or if you are a limited liability company and your revenue is, just go and check FRC Act of 2023. Okay, it has expanded the scope of PIEs. I think if your revenue is more than 30 billion, and if you are regulated by NAFDAC, by, it listed all those regulators. Once any of those regulators is regulating you, then you are under PIEs. So please go to FRC website, download the acts, okay, for you to know, beyond your exam as an accountant, if you work as an accountant in your company, you can begin to talk to them about the issue of sustainability. So let's look at the 17 documents that must be submitted to FRC. Can you see? Sustainability disclosure, readiness test assessment. FR students, you have to cram this. They categorize them into 3. I'm not sure it may bother SBR students, but I don't know. So we also try to read it because it's in both syllables. Okay. Now, a categorized it, I think it may even ask in SBR more because he believes that you're all chartered accountant already. It's just that you want to prove to them that you're chartered. So that's what you're doing next week, right? So you may also want to know this. So the first is items to be submitted at least 3 months before the beginning of the reporting date. So does that make sense, right? So if the beginning of my reporting date is January, that means I must submit this item before 3 months before the beginning, 1st October. So let's say 2026. So yeah, 2026 is, let's say that's the beginning, and I want to start to implement sustainability. I must submit these 3 documents by 1st October. Number 1, board resolution approving the adoption of IFRS sustainability disclosure standards. Number 2, gap analysis report. And number 3, implementation plan. Again, you may need a consultant to do this. You may not have the internal expertise to do all of this. Then B, you intend to that must be submitted not more than 3 months after the beginning of the reporting period. So if the beginning is January, so January, February, March, by 1st April, 3 months after, okay, or 31st March, I must submit this document. So you have them there. IFRS Sustainability Disclosure Policy, Identification and Application of Transactional Release, Reliefs, Enterprise Risk Management, and Sustainability Framework, evidence of board approval. So you have them there. And the last one is item that was submitted not more than 6 months after the beginning of the reporting period. So by June, you have to submit evidence of registration with the entity and professionally engaged sustainability reporting process with FRC, description of models used for scenario analysis. In fact, number 17 is very interesting, internal control over sustainability reporting. Currently we have internal control over financial reporting. So now we'll be having internal control over sustainability reporting, if you understand what I'm saying, right? Okay, so these are the things I think you should learn, right? For you to, for your exam actually. But beyond the exams, you're also looking inward into your company. All right, so let's quickly go to IFRS S1 and IFRS S2. All right, I think I have a lot of comments here. Someone said, are we going to get IFRS 18 material you presented? Of course, it's for you, right? It's a free class, so I will gladly give it to you. So don't worry, in case you are meeting me for the first time, I'll call out my number at the end of the class so you can reach out to me on WhatsApp. I'll forward them to for your exams. And I think even the mock exams, I'll also send it to you so that you can see the way those questions are being asked. Okay. Please add the presentation slides. See, okay, I think I've addressed that earlier. I can, the more you look, the more you see. Yeah, please, I need the material, don't worry, it's for you. Okay, someone said AAF, pilot question, ask 1 sustainability disclosure. Oh, I see. Can you see? So in audit, you see, as I said, it could be tested all random. Okay, so people that are not taking SBI, because I know I can, they know that some people are past CR, the old CR, but they are still writing maybe case study, maybe advanced taxation, or any other paper. They will make sure they test sustainability questions, in those papers, right? So can you see? All right, so let's move to IFRS S1 quickly. Let me stop sharing this. I actually have the standard here in that material too. I didn't know, but that's really good. Then I still have the separate material on IFRS S1 and IFRS S2. Kindly confirm you can see my screen, please. Don't worry, in less than, let me see. Yeah, we are still within time. I will leave you before 8. Sorry, before 9. Yeah. So that I can go back to study. Yes, so let's quickly, I'll just, quickly explain. Now, IFRS S1 is dealing with, as you can see, general requirements for disclosure of sustainability-related financial information. FR students, I can want to know this, right? SBR students, I can want to know both IFRS S1 and IFRS S2. But for FR, it's limiting it to IFRS S1. Now, let me quickly tell you what's the difference between the two. It's very simple. You see, this IFRS S1 is like the IASB conceptual framework. That's it. It's not the actual standard that you can apply, right? IFRS S1 is providing guidance. That's why I call it general requirements for disclosure of sustainability-related financial information. The actual standard is IFRS S2, right? which is climate-related disclosures. Did you see now? That's the major difference. So under IFRS S1, it now told us what is the scope of IFRS S1, okay, the applicability. Then he also gave us some guidelines around, if you remember the ISSB conceptual framework, you know you have the chapter 2 of the framework, you have the qualitative characteristics of financial information. So he also told us the same thing, qualitative characteristics of sustainability related financial information. So if you remember, there are two of them. You have the fundamental and the enhancing. That's the same thing you have here. So technically, if you have read your ISSB conceptual framework, you have also learned part of IFRS S1, because it's just like a guideline, like a policy, like, you know, that guides you into implementing IFRS S2. So that's the difference between the two, right? Then from there, we'll now check some other requirements around the core content, and you must know the core content. Okay, so you have the core content under the two standards. So the core content under IFRS S1 is giving us the requirements. Then the standard is not telling us what we must do to apply or to disclose those core content. So upfront, that's just the difference between the two. Now, let me now quickly take you through those information or specific things that I think you should know. What is the objective of IFRS S1? As I said, IFRS S1, the objective is to require entity to disclose information about sustainability, risk and opportunities, or sustainability related financial information that is useful to primary users of general purpose financial report, just like you have under ISSB. So it's still the same, right? Right. So you disclose information about sustainability related risk and opportunities. IFRS S1 also says that all sustainability related risk and opportunities that could reasonably be expected to affect, look at that, to affect entities' cash flows, its access to finance or cost of capital over the short, medium, and long term. That's it. IFRS S1 requires an entity to disclose information about sustainability-related risks and opportunities that could reasonably be expected to affect. So if you want to, read the introduction part, just read the side, you are good. Just try to put that in your mind, because there's no calculation, you just have to read and read, right? To affect their cash flows, access to finance or cost of capital over short, medium, and long term. That's it. So that's what he wanted them to disclose. So let's now look at the conceptual foundation. As I said earlier, qualitative characteristics of useful sustainability related financial information. So you have the qualitative characteristics and you have the enhancing. You know that the qualitative characteristics, just like the IASB, there are two. It has to be relevant and faithful representation, right? Faithful representation, it has to be complete, it has to be neutral and free from error, right? Then for enhancing, there are four of them. I think I normally gave this acronym CVTU, right? Comparability, verifiability, timeliness, and understandability. So that's exactly what you have here. So on and on, you now begin to explain what is fair presentation, just like the faithful representation. That's the complete, neutral, and free from error. That's being accurate. Okay, so please take note of that. Now, materiality. You also need to understand what is materiality. So in case, maybe in FR, this is IFRS S1, it can ask you to discuss the concept of materiality as it relates to IFRS S1, right? So you tell the examiner that an entity is required to disclose material information about sustainability-related risk and opportunities that could reasonably be expected to affect the entity's prospects. Then you now go on and say, in the context of sustainability-related financial information or disclosures, information is material if omitting, misstating, or obscuring. What's not obscuring? You blow it, okay? That information could reasonably be expected to influence decisions that primary users of general purpose financial statements make on the basis of those reports. All right. So that's the essence, that's the meaning of materiality. So in case he asks you to discuss that, then you can quickly tell him all of that. So all of this other information is now talking about reporting entity, connected information. I don't know, I'm not sure it can bother you on that, but I think it may bother you on core content. So there are 4 core content, all right? The first is governance. So learn it now. And the second is strategy. You cannot write strategy first. Be with me here. You cannot write strategy first. Everything is starting with the top, that your control environment, and that's your governance. What governance process, controls, or procedures the entity used to monitor their sustainability related risk and opportunities. Then from there, strategy, right? So you have to arrange it in that manner, right? Strategy is the approach the entity used to manage sustainability related risk and opportunities. You know, again, this is IFRS S1. So just giving us a broad, an overview. When you get to IFRS S2, we'll now give you the detailed content of all of these 4. And that's what SBR candidates will have to battle with. I will show you shortly, right? Then number 3 is risk management. The process the entity used to identify, assess, prioritize, and monitor sustainability-related risk and opportunities. And of course, the last one is metrics and targets, right? What are your metrics? How do you measure your performance relating to sustainability-related risk and opportunities, including the progress you are making? So your metrics is what are your indicator, you know, just like financial indicator. Your metrics, your emission should not be more than this, your water use should not be more than that, then your target, okay? Or sorry, your metrics is water use, emissions, and all of that. So you have that under scope 1, scope 2, scope 3. We'll see that on IFRS S2. Then what's my target? My target is that my emissions should, I want to target this, you know, water use, this is my target, and all of that. And I think maybe in the nearest future, government will start taxing carbon emissions. I think they're already doing that in UK and all of that, right? But I don't know whether they will give you carbon credits. If you meet those targets, maybe they will, I don't know. But most likely, they'll start introducing that once this is fully operational in Nigeria. So remember the core content: governance, strategy, risk management, metrics, and targets. They should be able to explain them, at least on the face like this. The for SBR candidates, you need to know it more deeper under IFRS S2. Okay, I think that's what you need to know. Then you also have some general requirements. Don't let me bother you on all of this. So the general requirement around location of disclosure and timing of reporting. So you were just trying to tell us where you locate it in your financial statement or your annual report and the timing of reporting. So obviously, your sustainability related financial information you are disclosing must relate to the same period of your financial statement. That's what that is saying. So in case in SBR you see a question where maybe they created a scenario where the company doesn't know how to disclose the location or the timing of that reporting, then you can quickly tell them. So if you check the mock exams, you will also see that kind of question. So I've been able to, you know, look at everything holistically and help you to create questions that I think the examiner can test. So let's quickly now check IFRS S2. Okay. Let me stop sharing this. I think I have it on a separate document. Okay. So this is the last lap. All right. Okay. Sorry, I'm just trying to, you know, explain so that I don't take your time. Please confirm you can see my screen. Okay, great. So can you see this is IFRS S2 climate related disclosures, right? So again, you are not learning anything new actually, but this is the actual standard. We are just learning in more details. As I said earlier, IFRS S1 is like a guide, general requirement, like just your like it's just like, let's say, sustainability conceptual framework. That's the way it is, right? to the general requirement, what you need to understand, okay, how do we disclose, what should we disclose, you know, what are the reliefs, what are the exemptions, what are the materiality and all of that. Then the actual standard is now IFRS S. And I told you why we have the S there. That means sustainability. Anytime you see S before the number, then that means that standard is related to sustainability. It's just to differentiate between the normal IFRS standards and sustainability standards. Okay. So again, what is the objective? So I need your attention here, especially as we are students, FR students. We are done with your own, right? IFRS 18 and IFRS S1. But you can still listen, you can still learn. Now, here, what is the objective of IFRS S2? Now, IFRS S2, the objective is to require an entity to disclose information about sustainability about climate. You know, earlier we were talking about sustainability related risk and opportunities, but here you're not looking at sustainability, climate related risk and opportunities, right? That is useful to the primary users of general purpose financial reports. Okay, so you are looking at the climate related risk and opportunities. Now, IFRS S2 applies to two things. Please be with me here, SBR candidates. Number one, climate related risk to which the entity is exposed to. Okay, climate, just like the name, right? From the name of the standard, climate related risk to which the entity is exposed to. And they are divided into two. Number one, climate related physical risk, not physical. Is it physical risk? Then two, climate related transition risk, right? So that is the division of climate related risk to which the entity is exposed to. So climate related physical risk, you know, in some Western worlds, they are really exposed to all these hurricane, earthquakes, and all of that. So that's what I think that's where they are coining that from. Climate related physical risk and climate related transition risk. And you know, for those, you also have extreme weather conditions, right? Then the second, number two, is climate related opportunities available to the company. So basically, there are two: climate related risks to which the entity is exposed to, then climate related opportunities available to the company. That's the scope of IFRS S2. But remember, the climate related risk to which the entity is exposed to is further divided into climate related physical risk and climate related transition risk. Is that okay? Now, climate related risk and opportunities that could not reasonably be expected to affect entities' prospects are outside the scope of IFRS S2. So in case in SBR, we created a scenario, and in that scenario, the examiner says there are some climate related risks and opportunities that the entity has assessed is not going to, you know, affect their business prospect, but that they are wondering whether that should be disclosed. Then you tell the examiner that according to or in line with IFRS S2, the scope is actually this. However, climate-related risks and opportunities that could not reasonably be expected to affect the entity's prospects are outside the scope of IFRS S2. So let's look at the core content again. Then you have the governance, you know. Can you remember the core content? So you have governance, strategy, risk management, metrics, and targets. So when you have this note, you now need to read them into further detail. So what I did earlier was just to give you an overview of them, and that's what is required for IFRS S1. And if you're writing FR, but here you're writing SBR, then you may want to know much deeper. But again, you may not also worry yourself. You know, you understand that governance process that you are using to monitor climate-related, you know, risk and opportunities, you know, is in place. That's it from the board. It's either they have a designated board structure or board committee that oversees sustainability related issues, or they expand an existing board structure, you know, that we also take care of our sustainability related issues. Then you also have your strategy. So under the strategy, you can see specifically the content, what the examiner, what the standard is saying. A, climate-related risk and opportunity that could affect the entity's prospects, the current and anticipated effect of those climate-related risks. So you can read it in more detail. Okay. Then you also have risk management. Can you see? It's very plenty. So these are the content, but you can just find a way to have an idea around them. So you don't need to necessarily list them here. And the examiner can just pick one of them and ask you to explain. Okay. Then metrics and targets. This is where you have scope 1, scope 2. All right. So under the metrics and targets, you also have those contents. I think under there you have the climate related metrics and targets. Can you see the first is greenhouse gas? Okay, your CO2 and all of that. Then you have the how do you measure under the greenhouse gas, how do you disclose absolute gross greenhouse? So these are technical areas, as I mentioned earlier. Then how do you measure your greenhouse gas emission in accordance with greenhouse gas protocol? Then you also have number, let me see. Okay, so as you can see, A there is a greenhouse. So under that A is now divided into 1, 2, 3 Roman figure. Then you also have some other breakdown. The number 2 is climate-related transition risk. Can you see that? So that is speaking to the amount and percentage of assets or business activities that are vulnerable to climate-related transition risk. So these are the content that you need to disclose. The number C is climate-related physical risk, and the amount or percentage of asset or business activity vulnerable to climate-related physical risk. I think in this part of the world, maybe physical risk around vandalization and all of that. But I don't think we have extreme weather condition in Nigeria yet. I'm not sure. Maybe another part of Nigeria. But again, you look at your own company or the scenario the examiner has given you actually. Then you also have climate-related opportunities, capital and deployment, internal carbon prices, remuneration. Okay, so find a way to learn this content. You can just find a way to summarize it and try to, know that. So in case you decide to bring that up, then you know what to do. Okay, so that's it. Thank you for your time. If you have questions for me. Okay, somebody said just climate. Yeah, correct. Yeah, very correct. So if a company is located there, then you need to consider probably there could be extreme weather condition, right? Thank you very much for your time. I hope you are blessed. There are 4 minutes to 9. Okay, I think I tried. Yeah, I think I tried. Thank you. So in case you don't have this material, you can reach out to me 0036 324090 0036324090. My name is Ayami, right? All right, so you are doing case study. You see me tomorrow by God's grace. I'll be at SC, right, 1 p.m. Then online, come back at 7:30 p.m. We'll try and see what we can do around the pristine analysis, but I can assure you, you'll be very blessed, right? So we're working on it. All right, I wish you the very best in your exams. SBR, please take note of the mock as well, right? So they are very detailed. It will help you to really prepare well. You really need to prepare well for SBI, right? So that's why I just make it a duty this is the first time I'm lecturing sustainability on video. I think I did that once at the physical class, but on video like this is the very first time. It's a new standard. All right, so you can rewatch that link that I used to join the YouTube. You can just use it to rewatch this video if you want to. But again, if you don't want to rewatch it because of time, just, if you have taken note of what I've said, if you have the material, then you can just, use the material to summarize sustainability related issue. Okay. And don't also forget IFRS 18, especially just to, understand the basis, the need for IFRS 18, the justification around it, and all of that. Okay, so that's it. Thank you once again. Please reach out to me. My number is on the chat room. You can quickly pick it up before we end the class. If you need this material, I will build them to you right away. All right, see you some other time. I wish you the very best. God will grant you retentive memory, and you will succeed in this exam. Thank you. Enjoy your day. Sorry, enjoy, yeah, your day, yeah, because you are reading overnight. All right. And if you want to sleep, enjoy your sleep and wake up tomorrow morning and continue reading. All right. But sincerely, I wish you the very best. I wish you the very best. Thank you. Take care. Bye. See you.